Broadcasting from the Allen B. Levan NSU Broward Center of Innovation at Nova Southeastern University. Welcome to Sunshine Startups Live, featuring rockstar entrepreneurs, bright ideas, and experts on the startup ecosystem. And now your hosts of Sunshine Startups Live, Jim Ryan and John Wensveen.
Welcome to Sunshine Startups Live. I'm your host, Jim Ryan, investor, entrepreneur, and startup enthusiast. I'm co-hosted today with the great and powerful John Wensveen. John, great to be with you again.
It's great to be with you, Jim. So John Wensveen, Chief Innovation Officer at Nova Southeastern University, the largest private research university in the state of Florida, by the way, and Executive Director of the Levan Center of Innovation, the world's first theme park for entrepreneurs, where we support the founder's journey from birth of an idea through successful exit or global expansion. And I cannot tell you how excited I am. We have Miami in the house today.
That's right. Miami's in the house. And just to share, the purpose of Sunshine Startups Live is to share the movers and the shakers in the state of Florida with a focus geographically on what's happening with the burst of startup activities in South Florida, and really excited to have Jared Schwitzke here, who's Managing Director for Miami Angels. And Jared, great to be with you today, and thanks for coming.
Thank you both for having me. I'm very excited to be here.
So lots of questions for you. I'm a former Miami Angel myself in years past, and so I have a familiarity with the group. But tell us a little bit about Miami Angels, and then I want to take a step back a little bit and talk about you specifically in coming to South Florida. So
Yeah, I'd be happy to. This is also going to act as somewhat of a pitch to get you to be a current member as well. But so Miami Angels is an angel network here in Miami, as the name aptly implies. We've been around for nearly 10 years. Our group was founded back in 2013 by a group of angel investors at the time in the area. They were all writing checks on their own and figured they might as well formalize the group. It was first Accelerated Growth Partners, Inc., and then the great Rebecca Donta did the rebrand of Miami Angels, which I'm very thankful for because I love that name much more than the former. We have roughly 150 so members from across the globe, Africa, Europe, Latin America, Chicago, San Francisco, New York, Los Angeles, etc. We look for early stage post-product or post-revenue technology companies that are raising a pre-seed, seed, or maybe even a Series A round of capital. We help them with their final tranche of fundraising, essentially, which can oftentimes be the hardest. We like to find founders that have already sort of established a lead investor, and they're looking to close out the round, and that's typically when we get involved. So in terms of my background, I'll try and make this relatively short because it's not that interesting. But I was a part of the COVID migration into Miami. So I had spent the lion's share of my career out in California. I've been very fortunate to hold a variety of roles in the venture ecosystem. I started off working at larger technology companies. I then helped start two different venture-backed startups. One was in the travel space. The other is a Series B fintech based in Los Angeles. I then went to go work at a venture capital firm in the Bay Area, and then made my way into Miami during the pandemic. I'm originally from the East Coast. I'm from right outside of Charleston, South Carolina. My mom's a Cuban immigrant, so I've got family in Miami.
Great food in Charleston.
Yeah, great food in Charleston. Great food. Not great for you, but great food. But I have family in Miami. I've been coming to Miami literally my entire life. So I jumped literally at the first opportunity I could to come into town. Met Brian Breslin, who I'm sure you both may know. We started working on a project together. That project led me to Miami Angels, and here I am today. So it's been a great ride. I'm super excited to be back home, as I like to say, on the East Coast, and excited at what the future holds for Miami's tech ecosystem.
So you talk about the Miami Miami migration, right? And due to COVID, and it's funny, we talk about Miami a lot, but I like to talk about South Florida as a region and really the greater Miami statistical area. And if you think about the trends that were occurring through COVID that drove a lot of traffic here, specifically to South Florida, because it was truly on fire. It still is on fire. But are you noticing any trends in, say, the last year compared to what was happening in 21, 22, and early 23 in terms of what the ecosystem is doing or not doing? Because I know some people have come, some people have left, some people stay, more people continue to come.
Yeah. I mean, I think there's a few obvious points and maybe then a few more, myopic ones. The obvious is that the crypto and Web3 boom that happened is somewhat dying down a little bit. And that's not to say that the industry is at risk or anything of that nature, but I just think you're starting to see better companies that are building more enterprise solutions, things of that nature. So that's definitely died down a bit. There's still every day I'm talking to a new firm or a new GP or a new VC that's moving into Miami. I don't think I've heard of that many that have left, but I definitely know that a few are still coming in every single week. So in terms of the overall trends, I think the macro trend that I've been noticing is that early stage investing has taken somewhat of a dip as opposed to later stage, and that obviously affects us. That affects the ecosystem. But
what do you attribute that to? Is that due to the economy, that are investors being a little more conservative, cash conscientious about going into additional tranches with companies that they prior had invested in that maybe saw some initial traction and some success?
Yeah, I'd say that has a large part of it. So at the earliest stages, you are pricing in that risk. That's the riskiest stage of development. At the later stages, when you look at a company that might be Series B, Series C, it's a lot easier decision if you're an investor to invest in a company that's making 20, 30, 40 million dollars a year. You might not have as high as a return, but it's a safer bet. Whereas at the earlier stages, oftentimes it's a group of guys and girls that have a deck and some limited experience, and they're trying to convince people to give their money. And in this environment, that's a much harder sell. So I would say that's probably the largest part of it. But also, I mean, just to be very candid, I think our ecosystem here in Florida could use some catching up to do with respect to early stage pre-seed development. I think that the East Coast in general, to be completely honest with you, and this is my opinion, I'm not saying this is fact, this is just my opinion, but I think the East Coast in general could use a lot of help on the pre-seed, seed stage development. I think that is one thing that California is great at with the Y Combinators, there are other incubators. It's a great place to go if you're a founder with nothing but a pitch deck. The East Coast is a great place to go if you're a founder that's seeing 30, 40, 50 million a year in revenue. There's a lot of growth stage capital here. It's actually relatively easier.
Really second stage capital,
yeah,
right?
Yeah, exactly.
So you bring up a really interesting point about the early stage in investment. And when we were building the Levan Center of Innovation, we wanted to recognize what kind of challenges were specific to South Florida with the ultimate goal of having a local, regional, national, international impact. So we looked at all the different regions around the country and in some cases around the world. And we found that the friends and family money in South Florida is pretty accessible. And then that's where it usually stops. And there's a big valley between that and the next stage, and then companies die. And one of the statistics that really blew my mind at the very beginning is that most small businesses in South Florida are 20 employees or less, and they don't scale beyond that, or they fail completely. And we created what we call an innovation ecosystem chart, where there's 11 key elements that make an innovation ecosystem highly successful. And Silicon Valley, Greater San Francisco area, they nailed it for a number of different reasons, and they have pieces of infrastructure that we probably won't have here in South Florida, at least in the short, medium, long term. How do we continue to make sure that we are on fire in South Florida, attract those entrepreneurs and those investors, scale those businesses so that they are sustainable? And how do we close that gap about bringing in the funding if that gap continues to be there? What's the solution?
Yeah, I mean, I think, places like the, Alon Levin Center of Innovation are a great support for this. A lot of time, earlier stage founders don't have access to state-of-the-art systems, offices, et cetera, to be able to do this. And so I think we need more programs such as this. I think from my perspective, one of the things you need is, or at least two things that you need, and certainly these aren't the only two, but you need a vibrant sort of educational ecosystem, schools, universities, things of that nature. And from what I've seen, there's a lot of that down here. Now, many will say that it doesn't compare to the Stanfords and things of that nature, which I'm not going to argue. I didn't go to either, so I can't speak, and I only like to speak on firsthand experience. But I think another key component of it, which I'm super excited about, is having the larger tech companies in and around the area. Because if you're an early stage founder, you're an engineer, you're an analyst, you're something of that nature, you want to know that if you move out to an area and your company doesn't succeed, which all of the data in the world tells you that it likely won't, that you have a safe backdrop, a Google, a Microsoft, an Amazon, a Spotify, something of that nature. And I'm very, very excited at the prospect of these new companies that are coming in, because we are seeing it. I think don't quote me on this, but I believe Microsoft is leasing a building in downtown Brickell. I know I read about Spotify having a new headquarters here. So there's a lot of these companies that are coming into play. And so I think those are two really key components of it. And then once that happens, then you start to see a lot of the angel networks, a lot of the innovation centers such as this really start to have a play, because then you can sort of funnel entrepreneurs into this ecosystem. And then if they fail, there's a safety net. I think one of the things that is scary to a lot of founders right now about South Florida is if you do fail, you're likely going to have to move back to San Francisco if you want to get a good, cushy job at an Amazon or a Google, or at least even maybe not San Francisco, but the West Coast. And so I think having that safety net of employment, if and when your company fails, is really important. And we're definitely moving in that direction. So I'm super excited about that.
Now, Miami Angels obviously been around for a number of years now. Do you know what the exact start date was or year that it kind of came into inception?
I do, 2013. Don't
Okay.
know the exact date. I could find it, but we'll go
That's
with the
okay.
year.
But obviously early on, before a lot of the accelerators and innovation centers started here, when I was a Miami Angel, obviously it was a small group of individuals. I was shocked to hear from you earlier about how large the group has grown. And what's the total headcount now of angels that are part of the group?
Yeah, we have over 150 members. I think the exact number is 157. And I attribute that growth. And by the way, this business model was not me. I just inherited it. So I do not want to claim credit for any of this. This was all the individuals before me that led to this. But I think we have a really interesting business model for an angel network. Most angel networks, most syndicates, most private equity fund structures have business models that are predicated on carry and or management fees. And Miami Angels is a membership-based model. And so as a result of that, we tend to see people that are much less sensitive to a yearly annual membership fee as they would be to a 20% rate on a 6 or 7 figure distribution, God willing they be so lucky. And that's allowed us to build a membership that's actually comprised of more than 1/3 what I refer to professional investors, which is super exciting. When I say professional, I don't mean they're professionals, they're amateurs. I just mean it is their job to invest full time. So they're a venture capitalist, they're a general partner, they're a private equity, they're a family office, et cetera. And so more than 1/3 of our membership base are those individuals. And so that acts as a great catalyst, the flywheel, which is the term of the day, of getting interesting deals on board and then referring new members, et cetera. And also when you have a down market, right? When you have a down market, if you are a network that is solely predicated on carry and or management fees, when you have a down market, there's really not much you can do. But when you're a membership-based community, you can host events, bring the community together. And so there's a lot that we can do. So I'm super, super proud of that business model. I love it. And that's what I would probably attribute that growth to.
I remember reading something in Refresh Miami, and I refreshed it again today just to, before we met with you. And your typical investment deal, if I recall, is it something between $200,000 and $500,000 based on a $2 to $8 million overall investment? Is that about correct?
Average first check size tends to range anywhere from $250,000 to $500,000. So based on that amount, there's a number of inferences you can make. Right, we're not leading rounds, we're not taking board seats, we're not trying to set the terms. As I mentioned at the top, we're a group that tends to come in and help founders raise that last tranche of capital. Now, that's not to say that we won't look at any pre-seed deals, we won't, but that's just what tends to be the most efficient for our members currently. And if the group grows, if we get to 500, that might change, right? We serve our clients, if you will, and so that's just how it is at this current point in time.
And this growth, obviously, with Miami Angels, now 150 or so members. What are sort of the demographics? Who are obviously there's an accreditation.
Yep.
Are you seeing an influx? Are these people in and around just the South Florida community? Are you seeing a part of the migration from New York and some of these other areas? Are these folks coming in from Latin America and they're interested in being part of the ecosystem? Kind of talk about the demographics of the group a little bit.
Yeah, well, we're still very much a Miami-based organization by Miami investors for Miami founders. I'd say about 3/4 are residing here in South Florida, Fort Lauderdale, Miami, et cetera. And then the remaining quarter are sort of spread out from those other regions that I mentioned. Again, Africa, Europe, New York, Los Angeles, Chicago. I do like to make the joke all the time. You could call us Rio Angels, and that would probably track. We do have a lot of members in from Latin America, but yeah, still primarily.
And why is that? Why do they see Miami as sort of a beacon, maybe a Silicon Valley of the East, or why is that? Is there such an interest and influence there?
Yeah. I'm going to go on a bit of a tangent here,
Sure.
so I'll apologize in advance. But you often hear people try and compare Miami to the New Yorks, the San Franciscos of the world, and just to be completely honest with you, I think that's an exercise in futility. When you look at the data,
I'm in full agreement with you. When people say, "Oh, Silicon Valley," it is not.
It's not. And when you look at the data about how much venture capital comes through the Bay Area, we are hundreds of years away from even.
I think it's like
that.
80% come from venture capital from everywhere else, and it's just amazing that statistically that the number is so small. But although the quantity of startups is quite high.
Yeah.
So, but please go ahead.
Yeah. And so I think when I think about Miami, part of the reason that I was so excited about coming here, and I believe this is why, to answer your question, I believe this is why so many of these individuals are joining, is that Miami does, at least in my opinion, have the potential to act as more of a Singapore, if you will, as opposed to a San Francisco, more of a global hub, sort of the gateway to North America from places such as Latin America, from places such as Europe, even Africa. These are markets that are all growing significantly. They're still nowhere near where North America is in terms of enterprise value or capital deployed, but they're growing. And I think that if you're looking at where to come in from or where to be a part of a network, it's New York or Miami, and that's really it. And so obviously Miami is closer to Latin America, and so I think a lot of Latin American investors want to get involved in North American startups. And we're a natural fit for that.
That's what we're finding too, even with the Levan Center and building up these what we call country desk models, where we have affiliate agreements with countries that have growing ecosystems. And Miami being the portal for successful U.S. market entry, this is your way in if you've got a landing pad that'll help open those doors, which is kind of interesting. I want to go back to looking at companies and what makes a viable investment. And I was just on a panel yesterday, funny enough, we were talking about talent and the critical shortage of talent and recognizing there's talent and then there's qualified skill talent, which is a huge difference. And some of the entrepreneurs, the founders that we've been talking to are saying, I can't necessarily find the local qualified talent that I need. I got to import it. I got to subcontract. I got to go to other parts of the world or other parts of the country. Are you finding when you look at deal flow that this is a challenge for these companies trying to find the qualified skill talent they need?
I'm certainly hearing it. I wouldn't say I'm finding it, but I'm certainly hearing it. When we evaluate a deal, we tend to look at sort of the metrics of the business as it's an earlier stage investment. These companies typically have 5-10 people, so we're not doing deep diligence on the locations of their employees. Are they remote or anything like that? It comes up, but it's certainly not a requirement for us to look at a company. But that being said, I do hear that. I do hear that talent is difficult to find here in Miami. I don't know why that is, but as you know, I tend to trust founders. They're the ones who are in it every day, and that is something that I hear. So anything we can do to improve that would be great.
I think that's one of the differences, though, between mature markets like San Francisco and Austin and New York and Boston and other parts of the world, was that when you actually look at the academic institutions, they're very much co-invested with industry and vice versa. And I think what we're finding here in South Florida, that there's still a disconnect between private and public sector, higher ed institutions, as well as the private training institutions, where we're not necessarily co-invested with each other. So we got to sunset some programs. We have to add more industry certifications and not just degrees all the time. And I think that gradually that environment is changing, but I still see there's a valley between industry, academia, and government, if you want to throw them into the mix. And I think that's one of the opportunities where South Florida can now leapfrog into the future, but there has to be more of us sitting around the table representing industry, government, academia, and co-investing into these programs so that we can recruit and home grow these entrepreneurs and scale those businesses. So it really wasn't a question. It was more my tangent sitting on my soapbox. But I was just curious about the question, because you could have the best model in the world and you can have the right plan and the right money, but if you don't have the right people, it may be an issue. And I'm just really curious about how detrimental that is to the future of someone's business.
Yeah, I mean, what I see is we have a ton of founders who it's an obvious decision for them to come to Florida. There's a lot of tax benefits when you're at the founder level, obviously. And then we have a lot of VCs that come in. So we have a lot of founders. We have a lot of VCs. We are lacking in that sort of middle and entry level technical talent. And I think, as I mentioned earlier, a big help to that is larger tech companies coming in, because those are ultimately, the people that are building the companies into successes, and those are ultimately the people that you need to have a safety net. Founders can come here, and if they're a solid founder, they've got great relationships, and they fail, they can likely go out and raise again, right? Second time, third time, fourth time founders. Everyone fails at least once in their career, so it's the founders have a safety net. VCs, have a safety net. They can, network with other investors and probably find a good job. But that middle and sort of entry level talent, the people that actually build the companies, those are the ones that we definitely need to find here. So my hope is that once the larger tech companies come in, that we help solve some of that problem for them.
Can you talk about your deal flow? So obviously you have a large group of in the member organization now, and obviously there could be referrals there. Are you seeing a high volume of deal flow coming in? Is this the highest you've ever seen now, since obviously so much attention has been brought to Miami?
Yeah, we definitely see a high volume. I've been asked the question often lately, like, are you still seeing good deals? There is no shortage of good companies, at least in my opinion. I'm not the most qualified, but at least in my opinion, there is no shortage of good opportunities coming through. We tend to receive more than 100 different opportunities on a monthly basis from a wide variety of sources. We see a lot from Latin America, obviously. We see some from New York. We see a lot from California as well. Again, our organization is more global than it is just Miami, and so we tend to see a lot of deals coming in from there. So yes, look, there's no shortage. I am amazed and impressed every day by the companies that we see come into our pipeline, the pedigree of the founders, what they've been able to do thus far. Absolutely no shortage, at least in from what I'm seeing.
And then what is the process? So you then drill down, right? You curate these opportunities, drill down further, meet with some of the founders, maybe scrub those that are out, refer them elsewhere. So talk about that process. So for those startups that are watching us today, talk about the process for them to enter into Miami Angels.
Yeah, I'd be happy to, and I'll try and give the condensed version. So it's really a 3-step process if I'm thinking about it in its most simplest of way. The first is sort of an internal review. So myself and my team will take a first pass at the opportunity. We just want to take a look at the deck, look through the data room a bit, speak with the founder, understand that this is a real company, right? Understand that this is a real group of people behind it. And then from there is the most exciting and my favorite part of the entire process, which is the member feedback process. Part of the benefits, at least from my view, of being able to run an organization like this is I get to learn from people who are much smarter than I could ever hope to be. People with decades of industry experience in various sectors, people who have built companies in this space before. And so that process doesn't really have a linear format to it. We might start by reaching out to people whom we know have specific expertise in a particular industry, a particular company, et cetera. And then from there might head into a call between that group of individuals and the founders, or maybe a second call. We might end up putting together a quick questionnaire, but that member feedback process is probably one of the most exciting prospects or parts of our process rather. And then after we've done an internal qualification, after we've done sort of the member feedback and the members have qualified it as a good opportunity, we then move into sort of the syndication process. And that's fairly straightforward. It's a call between the founders and all Miami Angels members. Anyone who is a part of the network is able to join. Hour and a half long pitch, Q&A, field some questions, and then we go into syndicating the round. And that second part, the member feedback part, is very crucial, because one of the things that I'm most sensitive to is protecting a founder's time. I've been on the operator side before. I understand how much of a pain in the butt it can be to fundraise. It's not fun. It's grueling. It's brutal. And so the last thing we want to do is send a founder through a 3-4 month process, only to then go back to them and say, congrats, we've been able to help you raise a grand total of $20,000. And then they leave and they're like, well, I don't talk to Miami Angels. And then all of a sudden, it doesn't matter how big our organization is. It doesn't matter how much dry powder there is from our members. If founders keep telling other founders that we're a tough group to work with or it's not legitimate, then the group will die. And so I'm very protective of how much time we spend. And so that second process is meant to qualify deals such that if we do move into that syndication phase, we have a fairly good chance that we're going to help them raise 100, 200, 300, 500K. And look, it doesn't always happen, but success rate is fairly high thus far.
When we're dealing with early stage founders, particularly the first timers, they're very much focused on their pitch deck and the fancy art that they put behind them as they're pitching, and often forget about themselves. And I'm really curious, when you're looking at a deal, how much of your decision is based upon the product or the service that they've created versus who they are as individuals?
Yeah, I'm so glad you asked that question. So I saw someone tweet the other day. I can't claim credit for it, but I couldn't have agreed with it more. And this woman said, when you start angel investing, you look for ideas. And then you realize that ideas are a dime a dozen. And then as you get a little bit more experienced, you start looking at traction, because then you know the ideas, and now you can start to see, oh, this company's generating 1 million in ARR, 2 million, et cetera. And then as you kind of reach the final level, then you start focusing on the founders. I could not agree with that more. Having been on that side of the business, your company goes through product changes, team changes, investor issues, and you need a group of individuals who's able to weather that storm. Very rarely is the company that is started at the level of pre-seed the company that either goes public or is the company that is raising at the seed. So for me, it's of the utmost importance. And it's not to say that someone needs to have a vast amount of experience in a particular industry. We're looking at a deal now. I'll leave names out of it, but honestly, one of the most impressive founders I think I've ever met in my entire life. And that sentiment has been echoed by every single member of Miami Angels. Executives at big banks, things of that nature, have echoed the same sentiment. He studied classical music in college. He was a trumpet player in New York. Couldn't cut it as an artist. His words, not mine. Couldn't cut it as an artist. And then dove into a fintech and has been going toe-to-toe with people that spent 30 years in an industry. And then they're calling me afterwards like, this guy is incredible. Invest in him ASAP. And so for me, that's what I tend to look for. That's what I really love.
Well, if Einstein was fired from the post office, I think he broke the mold for that. So
exactly.
Miami Angels, obviously, you've got this huge group. It must be like herding cats because you've got a lot of A-type personalities in a group, men, women that have founded businesses before. How do you handle that sort of, such a large organization, and then everyone wants to sort of chime in on their opinion about a respective company? How does that work?
Yeah, so I think we try and prevent that at the beginning of the stage, right? At the beginning of it, of someone joining Miami Angels. So there's no form you can fill out to just join Miami Angels. There's no, sign up or anything like that. We typically host or have a call with every single prospective member. We turn away people every week that want to join, that we just think aren't going to be a contributor to the group. So I would say that we try to manage that at least as much as we can at the beginning of the process when we, quote unquote, interview them, talk about our group. We try and get an understanding of what they're interested in. We try and get an understanding of, how they might sound, or if they're going to come off as arrogant or something of that nature. And I think we do a good job of screening from that side. But every now and then, you've got a few people that end up getting through. And look, at the end of the day, the customer is always right. It doesn't matter. I don't care what job you're in, what function you're in. If you're the CEO, it's a board. If you're an investor, it's your LPs. If you're an engineer, it's your manager. If you're the managing director of an angel network, it's your investors. And so at the end of the day, I don't think there's any position where you can completely eliminate having to, succumb to a jerk at points in times. But the way that we handle it is just they're right. they're paying us. We owe them a fiduciary duty. They're giving us their money. So if they want to scream at us because K1 was late or something of that nature, they have every right to do that. And if it's not something that you think you're going to be able to handle in a position like that, then this probably isn't necessarily.
You've had a few successes, some accretion, potentially some exits, obviously. Quick, what are a couple of companies that have gone through the process with Miami Angels that have exhibited some traction?
Yeah, so our group has deployed tens of millions of dollars over the years, which has resulted in a portfolio of more than 50 plus companies. We've had 8 exits, 9 if you want to count a merger that we're currently going through, which is making my day-to-day life very fun. But our biggest success, and again, I can't take credit for this. I'm just in the seat now, but it was not me. I didn't build the car. I'm just driving it. Was Nearpod, which was an ed tech company.
Yes.
Homegrown here in Miami, was acquired for $650 million back in 2021. That actually represented about a 27x multiple on our earliest investors. Another one that I'm very excited about, another homegrown, found by Miami Angels. Again, not by me. That's the theme of today. I did nothing.
I'm sure you'll have your own successes here soon.
Yeah. I've been in the role for a year. Hopefully. As another one is Temp Me. It's a staffing agency for dental assistants and nurses and things like that. So great company there. We've had a few more that I could go into, but
so how do startups get a hold of you? And apply?
They can find me on Twitter or LinkedIn. They can email me, jared@miamiangels.vc. They can go to our website, miamiangels.vc. There's a form to get in touch with us. Send us a note, shoot us your deck. We'll take a look and go from there.
Can we end on a light note? You mentioned cars. Let's talk about cars. We all like cars.
Yes. We do.
If you could describe Florida, the current state of Florida, from an investor perspective, entrepreneurial perspective, what kind of car is Florida? We've never stumped anybody on this show before.
It's a green, candy-painted Lamborghini that's transitioning into a beautiful classic Corvette. And I'm very proud of that.
And as an owner of a classic Corvette, I very much appreciate that analogy.
And the owner of a future classic Corvette, 70th anniversary. All right.
Terrific. Well, thank you so much for being on the podcast today. Appreciate your time. Jared Schwitzke, Managing Director for Miami Angels.
Thank you both for having me.
Thank you.
Remember to subscribe, like, and share the Sunshine Startups Live podcast and follow us on social media. If you're interested in sponsoring or appearing on the show, please email us at booking@sunshinestartups.live.